Hello, fellow traders. 'Tis I, the Rumpled One. It is Monday, September the 27th, year's 2021. Let's talk trading. Trading is uncertain. These videos are for educational purposes only. Your results may differ from mine. Trading is uncertain. I've got an ongoing conversation with a trader out there in I guess YouTube and Facebook. And it seems like this particular trader is looking for certainty. But trading is uncertain. We were discussing the buy zone, and he seems to want more data, more information. He wants to know, well, if I do this, what's the chance it's going to do that? Well, the thing is, once again, we've got no probabilities. What we have is statistical outcomes. So, for example, looking at the pound dollar, if you took a trade in the pound dollar, you entered here, depending on where you put your stop loss and when you take your stop loss, it should be obvious that in this case you didn't get a short signal, you took a long signal, and if you've got your stop somewhere between the your trigger line and the positive side of the open, then you're just not understanding. And in fact, when I first invented the buy zone for stocks, I never talked about the stop because to me it was obvious. This was the long trigger. This is a short trigger. If you're long and you get a short trigger, the market's telling you to get out of the long and into a short. And some people are talking about, well, it could whipsaw back and forth. Well, I don't see any whipsaw really. So the thing is, it's uncertain. I mean, you put your trade on, will it go up? Does it come back down? Does it go up, come back down? It's uncertain what's going to happen. That's why you have to take profit, when you can. And sometimes you might take a little and sometimes you might take a lot. I mean, we had, the indication. Here's the pivot. We know statistically that pivots get filled. We had a gap down on the open. So we had two reasons to be biased to the long side. And usually the first couple of hours, Sunday/Monday trading is the spreads are whacked, and so you just bypass it. But actually yesterday I posted the video pretty much right at that first hour, just to give people, the traders out there, a different perspective. So, we came in here, price came down, we opened below, crossed into and above that buy zone area. If you would have taken that, let's see, you could have been in at 68, let's call it 69. There was a high of 82. So that's what, 13 pips. Not a bad day's trading, especially if you're trading with some size. I really don't know what more to tell you. Trading is uncertain. If a method looks like it's something you want to do, then you just got to get in there, start trading a dime a pip and see if it works or not. But if you're not willing to do that and test it out and try it out, then I don't know what to tell you. It doesn't matter how many statistics I throw up here on the chart. I show you, I run. Doesn't matter. When you get in the trade, all that goes out the window. Now you have to manage the money. You either take profit or you decide how much of a loss you're going to take. That's it. That's trading. And to look for more data, more statistics on something as simple as this, as I say, it should be obvious to the trader that there was no whipsaw. Now, some days it might be a little bit more, but I usually don't see that. But You know, if you get caught up in all that internet chatter, well, then, you know, have at it. Meanwhile, those who can are out there doing it. So when you know, whether you use the buy zone or some other method I've come up with, or your own method or somebody else's method, you know, one of the legs of that three-legged stool is your risk management. You've got to manage your risk. You know, make sure your position size and stop loss follow this simple equation so you don't lose any more on any one particular trade than you're willing to lose. You know, and you got to get your head in the game too, because if you've got all this fear, it's going to paralyze you. In fact, I saw something that, you know, all losses are because of fear. You know, all missing out is because of fear. And that's just the way it is. You know, if you're hesitant to click the mouse when you get your signal, it's fear. And the only way to, you know, get over that fear is just to do it. And then sooner or later you're not so afraid. You start to get a little confidence. Then you get a little competence and you're in that upward spiral. We've talked about that before, you know? And on the other side of the risk management's the money management. You've got to take the profit before the market takes it back. I mean, what's good? What good is it being up 50 pips if you wind up stopping out because of what your method, quote unquote, predicted where price was going to go? You know, I make predictions where price is going to go. Yeah, it's probably going to hit that pivot, or yeah, it's going to hit that return bar. But, you know, if I get within 5 pips of it and it shows any sign of weakness, I'm going to pop out of the trade. I'm just going to take the money off the table. Why should I risk, you know, all those pips I could have right now over the possibility of a couple of more pips? It's just not smart the way I see it. So let's see, we're looking at the monthly chart. We've got a month ends on Thursday. You can see we're in the lower wick zone of the previous month. Weekly, we're up 47 pips above that weekly open, 54 above the low and 22 off the high. All the gaps have filled. As you can see, we broke out of the opening range for the year. That line was at, call it 3703. We almost touched the bottom of, or the low of the opening range for the month. You can see here, almost touched it, but we pulled back. So right now we're in between those two ranges. So probably when today closes, we're going to be bordering or making a bridge between these two ranges. We'll just have to see what price does after that. 65 pips above the yearly open, 47 below the monthly open. And Friday we had an inside bar. You see here we broke out of the bottom, barely, but we did break out. We came up close, but not close enough to the high, so we're in that upper wick zone of the previous day. And you can see here we've got some inside bar action going on with the pound. We've got 5 pound pairs over 100 pips, with the pound dollar not being one of them, clocking in at 76 pips range. But you can see we entered the upper wick zone and then fell back out of it. Let's see if we can get back in there or not. And I've already gone over the buy zone for today. And looks like Red Rats had a few opportunities to feast here, coming off of that daily high at 137.28, put in a couple of hours ago. You can see here on the using the 15-minute, there's a couple of nice trades to the south side. The pivot trading plan, we opened below the pivot, so moderately bearish. said price near, pivot point short. It definitely crossed above, came below. You can see here we're above the top of the central pivot zone. R1 bias is short, so that's proven to be profitable twice, shorting at the 37.18 level on the daily. We took out the pivot. We still have a missed pivot from this month. On the weekly, we took out the weekly. We missed last week's pivot. So see if we can take that pivot out. And we've already taken out the monthly pivot. And I showed you earlier, we entered the upper wick zone and fell back out. On the lowest or highest low, lowest high trading chart here, you can see we're getting a long trigger right here at 37.063 for the M1, and looks like 37.068 right where we are on the M5. Oh, there's something I see I need to do on this chart. On HL5, display decimals, change that to 1. Then you can see the points. So if you've got the latest version of TRO HL5, that's what you have to do if you want to see the distance from these levels and points. Close to this level. And if you're wondering where do you get that TRO HL5, Crestlick.com's where I post my free code. And looking at the price action, the simple chart here, using the Walmart lines, you can see there was a short triggered at the 37.10. So there was a couple of times to take your pips off the table. And this is noon time back east in New York, so it looks like the traders are out to lunch. Only 7 pips, and we're about halfway through the hour. Daily range clocking in again at 76. Previous day was 79, so we're in the 42 percentile so far today. And looking at my zone's dashboard here, the pound almost entered the upper ATR zone, just missed it by about a pip or two. We are 60% of ATR above the open at the moment. Oh, and I was once again showing the buy zone, showing the high minus the open potential, open minus low potential. And that's all it is. It's just potential. Showing you what happened in the past, which has no bearing on what's going to happen when you put your trade on. So, fellow traders, please remember that trading is uncertain. You can have the exact same setup 10 times in a row, and you're going to probably win some and lose some because that's just how the market is. Always remember, never forget, it's not what you trade, it's how you trade it. So go out there and break the banks. Go out there and drain the banks and break them too. That'd be nice. This is the Rumpled One, over and out.